Hey, what's happening, guys? Hope you're doing well. Today is July the 1st, Canada Day. Let's go over some trades today. So I had a losing day once again in the paper trading account. And here you go. So it's 38.9% of a win rate, pretty bad. And P&L minus 200. So we're going to go over some of these trades here. And yeah, so a lot of it's quite interesting actually, because actually, again, I'm encountering the same thing where I trade the same setup a lot of times in a row for a loss every single time. I'm finding this kind of interesting because it's almost as if I found a strategy that loses consistently. But also, I think it's due to the fact that I'm largely looking at the market from a contrarian standpoint, and I often find myself trading against the trend. And that's a habit. I need to clean that up. And again, it's really interesting because this is a paper trading account. And I'll be honest with you guys, in my career of 1 year and 9 months of trading, I have never traded, first of all, this much before. And number two, I've never traded this bad before. Quite interesting. So I'm in a very interesting stage in my development here. And so yeah, let's get into it right here. And we'll look at these trades, first of all. And you're going to find a lot of trading counter the trend, being oblivious to the trend. First of all, yeah, it's kind of hard to explain, I'll be honest with you. So let's look at some of these trades and we'll see if we can kind of identify what it is I was getting wrong here. And again, I'm going to go back and watch the recordings and try to understand it all. And I'll try and explain it to you in the moment that I was trading it. Now, again, that's going to be kind of hard now because the market's already trading here. So just ignore what's going on in the tape here now. Let's just focus on what happened earlier. So this was the market and we pushed up to open, then we had a massive dump. So this was actually great because we pushed up towards the highs of yesterday, in fact, the overnight highs as well. And then we had a massive dump all the way down to the volume weighted average price down here. And I bought this long because I was noticing, I guess, the fact that this was becoming too obvious. And then eventually we traded lower because there was some resting sellers sitting around here around the 75s. Around the 75s, there was some resistance. And you can see that we had a pullback from that area, and then we managed to pull back again all the way down to the VWAP. And at this point, this is when the trading starts getting complicated. So I sold this because I was likely that we would keep pushing down because it was too obvious of a buy down here. Like, you can't just buy at the VWAP and expect to be right initially. So I sold that and then managed to take profit on this pop. And I was expecting to do it again a second time, but the paper trading fills are not always accurate. And actually, I had the order here and it got filled here, so that's kind of weird. I have to look at that. And then I stopped that one out for a loss as we pushed higher. And then at this point, I'm not sure what happened. It was the 10 a.m. news. That's right, 10 a.m. data. And then we pushed, and then we continued pushing higher. So I scalped that as a long, took profit. And then here, let's see again what happened. And then here again, I got long. And then I'm not sure why I stopped out here. I must have been not convinced. Then I got long again, took another break even. So again, this is just a bit of weird trading because during this sort of range, I wasn't convinced enough that the buyers are going to push this higher. But I had to realize that the resistance was here at 75. A lot of stop losses, a lot of sellers entered the market at 75 earlier, and it was likely that that got tested. That's what I had to keep in mind. And I didn't take a part in this move here. And yeah, so when we broke it, that's when I started to take a part in it as a short seller. And you can see here that as we broke to 85, and then we consolidated again here, pushed to a higher high. And then you can see, look at this sideways consolidation. So right here, there was not much profit to be had there. I sold at, what was it, 84. I had up until 77, and you can see the buyers stepping up strong here near the moving average, not really letting this price trade much lower. That was clear. In fact, so I got out for a break even. So no red flags in my trading so far at this point. So that was about what, 3, 4, 5 trades there so far. No red flags at all in the behavioral aspect of how I executed the trades. Let's keep going. So as we broke higher with no follow through, I sold that. I don't know why, but I did. And it was not a good choice because you can see here we were consolidating sideways and we broke it. I wanted to wait for how the price was going to react after we broke out and pulled back. Because remember, you want to see how the buyers and sellers are interacting first on the break of the trading range, and number two, on the initial consolidation after the break, right? So if we start to see a break and then a failure, and then we're seeing aggressive sellers taking out the bids, that's going to be a sign of a real failure. Whereas if we see a pop and then a pullback and then we're sort of kind of trading sideways, the sellers are not being aggressive enough to push this back into the trading range, that's a sign that we will likely continue to attempt higher prices. And again, that's why it becomes tricky. So you can see here we're in an uptrend. That's another thing that I became oblivious to. I became so focused on trading the fact that we were going to see potential failed breakout that I actually became oblivious to the trend. And that's obviously a mistake, of course. So let's keep going. So I sold that and then I stopped out for a loss. Now this is where my trading starts to take on a bad turn. And again, so we have a loss, and now I do it again, the same thing. I sell the market, which was not a bad setup if you look at it, right? If you look at that in hindsight, you can see here we're pushing these 93s. I think there was resting size at 200 if I'm not mistaken, and we had this break above the 96s. We didn't see much follow through, and then we initially pulled back right into the range again, into the moving average. So this right here was a decent short setup for a counter trend. But again, let's look at how much profit we got, and you can see that the market traded down to the moving average, attempted to break bearish, and resulting in a bull closing on its high. So right there, that was the signal that the buyers were not willing to let up here. There was no aggressive sellers willing to take out these bids here, and that we would likely continue to test higher prices. Again, something I got wrong. But this time, I didn't stop that trade out break even. Why not? I lost the ability to act mechanically because I wanted to be right. I wanted to nail that trade. So what I did was I left my stop in. It was probably around above 200. And guess what? Well, it got tested. So on the initial break, we had a little bit of a pullback, and then the buyers came back, and then I got stopped out above the 200s. Right here, now we're starting to see my trading behavior take a bad turn, which is obviously not stopping out break-even trades after I had profit for sure. And again, that's tough because it's discretionary, right? You can decide whether you want to put your stop at break even or whether you don't. 8 to 10 points of profit, like in this case, just put the stop at break even, man. Come on. Anyhow, so I'm just going back and analyzing how I behaved. And you can see here I did the same thing. Look at that. So at this point I was mad. This is when you start to see me trading irresponsibly again, and it's going down that turn of trying to be right. So I failed to short it here because I held too long. And then right away I entered the trade again. And then I failed to short it there. So that's 3 failures, same exact trade over and over again. You can clearly see the behavior right there. That's the behavior of just wanting to be right, right? So let's keep going and see how many times I wanted to be right and if I was ever right. So I sold it again there. After I got stopped out, I said, you know what? Boom, sell it again. Stop above 222 or something like that. And we had this little two-legged pullback right to the moving average. Stop that one out, break even. So why did I choose to stop this one out break even, but I didn't stop this one out for break even? There's lack of consistency there. That's not an example of being mechanical. That's being too discretionary. Stopped it out for break even, and then what did I do? I sold the market again because I was mad that I got stopped out break even. So something in me wanted to be so right about trading this market short while it's in an uptrend, of course. Something in me didn't agree with the fact that this market was clearly stopping me out left, right, and center, and I'm trading counter the trend. This setup right here, this is more of an A grade setup because look at that. We have a higher high breakout, a pullback, an attempt for a higher high breakout, and then a failure. Right there, this one, I sold that one, and I like this one much more than the others. Although, when you look at it in hindsight, I nailed this one, I nailed this one, and then let's see if I nailed this one right here. Look at that. Great move, right? So I managed to take off half the position there. So this is one of the winning trades. And you can see here, as we got that failure, we pulled back to the moving average, got a nice pop. Now in this case, this wouldn't have been a good example to put the stop at break even. You wanted to keep it above these highs because you can see how we had a massive pop to take out any break evens. And that happens quite often. If there's a big move coming up, usually you're going to get a pullback and then a retest to go and get people's break evens, and then the real move after, because you want to see how the price reacts on the retest. And again, it would have failed if we came up here and closed up here and then kept moving higher for another higher high. That would have been the failure. But you can see the sellers arrived to defend this. We had the break evens got taken out, and then boom, nice sell all the way down to this 200. Okay, and this probably would have been the 12 exponential moving average on the 2-minute time frame. This is a 30-second chart. So let's keep looking here. I took off half the trade there. We had a nice pop up to about the halfway mark. I consider this a retest, and then we pulled back for a lower low. That would have been generally a good place to take off the other half if you think about it. And then what happened? We came back up, traded sideways, 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 and then we came right back up to take out my break even. At that point, I had put in the break even stop, of course, on where I entered. And What do you know? Market comes right up to take out your break even. I would say, like literally, judging from the last 2-3 weeks of trading here, 70 to 80% of the time, the market's going to come back to test out your break even. And in this case, it did. Look, tested it, pulled back, found buyers around 207, came up for a higher high. We're not getting much follow through, okay? There you go. Now look at this right here. This is absolutely horrible. Now this is just me. At this point, I'm full tilt. I've lost my mind. I'm completely just oblivious to what's going on. I just want to be right. I just want to short this market. I just want to be right about the fact that this market is reaching kind of a high point in a trading range and we're likely going to move lower. This is me right now. So you see I sold right there. I literally sold the bottom of that move where there were no more sellers left to come, because somewhere in my world I was expecting this market to pull back and take up these lows here immediately. And obviously my world was not the world that the market was in. And again, oblivious to what the market's doing logically. Break to a higher high, stop out. Come out here, fail, pull back, I'll sell that. Again, oblivious to the fact that it was a breakout and I want to watch the sellers on the pullback and they were weak, and we break to a higher high. Do I stop out? No, it probably missed my stop by a couple of ticks. So we had this type of thing again where we see a higher high attempt and then a pullback. This is good right here. Higher high breakout, another attempt, kind of chops, and then the sellers come in to take that. That was pretty good. That's the kind of setup I like to trade. Nice pullback and then a higher high. Caught the buyers around the 15 zone. Again, buyers are buying these higher lows. Or it's not that buyers are buying the higher lows, it's that sellers are not being aggressive enough to push these, to break these higher lows. I would think that that's the better way to put it. And you can see here, again, now I like this setup right here. Take a look. So this was me stopping out. And then we have an initial higher high breakout and then a failure. Higher high, trading back into the range. At this point right here, I like it as a short better because this move was quite impulsive. So after a higher high attempt, after an impulsive move, if we fail that higher high, that's going to set up a good short. So you can see I sold that one right there, came to the moving average. We had chop, 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 and then a lower low. Look at that. So we're starting to see the sellers arrive here, and look at that volume spike coming in, and we're seeing more of this kind of chop, getting people to kind of buy the pullback, but you can see the volume's dropping off. If you compare the buy volume to earlier, it was a lot different here than it was here. You can see that the buyers are not being aggressive to buy those pullbacks anymore, and you can see that we managed to trade a lot lower. So test of these lows, I covered half of it there, I believe, and then a retest, and then a big pullback. I was actually looking for the market to pull back down to these 90s. We didn't get that. We pulled back to the 200s. That was the floor for that moment. The market couldn't trade below 200s. And then what happened from the 200s? Well, we traded much higher. And did we break the highs? Yes, indeed we did. And then we continued the uptrend. So this was the biggest pullback we got. And if we zoom out and look at the 5-minute time frame, you can see that we've been respecting our moving averages. The biggest pullback came right in between our two exponential moving averages, and I managed to be a part of that pullback after being wrong at least 4 times shorting it. But the thing is that when I shorted it those times, I wasn't necessarily wrong because the market gave me profit. It's that the majority of those times, like I'd say 4 out of 5 times, I let the market stop me out with a loss instead of a break even. If you're just getting into trading, this video is going to be very deep for you guys. You're not going to understand, you probably didn't understand half of what I just said. But if you guys are trading actively, then you probably understand what I'm talking about in regards to this stuff here. I'm just going to take it easy. Again, I'm going to analyze some of this behavior over the weekend. And again, it's really interesting because this is a simulated trading account. So I'm showing consistent losses in a simulated trading account. So I'm actually curious to see what would happen if I switch to a live account. Would I start seeing consistent gains because it's a psychological problem? Anyhow, guys, so lots of very interesting implications regarding the way I'm trading right now. And I'm going to continue on my journey, guys. I'm happy some of you guys are interested in watching the journey. I mean, it is kind of interesting when you think about it. Because normally when you see a person paper trading, normally people make a lot of money paper trading because it's quite easy. You can just keep averaging losers, but I don't do that. I'm all in, all out, like I said in yesterday's video. It's interesting how I can see that a lot of these trades are losing consistently. It's food for thought, basically. It's food for thought. Last thing I want to say is that the volume profile on Jigsaw is not loading correctly, so I have to send them a ticket for that. Every time I refresh the price ladder, it always starts off a new volume profile and it doesn't load the complete volume profile for some reason. So that's a problem. I have to send them about that. On the right here, we have the auction vista. It's quite convenient. All right, guys, that's going to be it for today. I love you guys. Happy Canada Day. Take care. Bye.